big chunk of our growth was due to Soonami. So it was really good because they had a use case in mind from the beginning. And we had quite a lot of alignment in terms of how we wanted to build the tech, because they also wanted maximum flexibility with maximum security. And they wanted to have like an innovative use case for which they would need to build a lot of custom contracts if they were to build it completely on their own. So the use case is venture funding, which is quite interesting in my opinion. Basically, people don't need to sell their ETH. They can stake their ETH, and it is generating yield. Yield is reinvested in Soonami's ecosystem while the principal stays safe. So you don't need to sell your ETH in order to support, but you just park your ETH there. And in return, you get the share of the ecosystem. So this was just one of the innovative ideas. We have a lot other interesting use cases in the pipeline right now. I guess like one that also publicly launched right now is Carrot Funding, for example. It's the first DeFi native prop firm. So I would say there's a lot of diversity in terms of use cases. Currently, Soonami is bringing the most in terms of TVL, but others are picking up fast as well. We started Rethink Finance from a personal problem. We were both involved in treasury management before, and we understood how painful it is to wait for multiple signatures to process every single transaction. The process was kind of like not fully decentralized, because you still need to trust this few multi-stakeholders that they're going to act on behalf of the best interest for everyone. But at the same time, it was also not very efficient, especially when it comes to a bit more complicated strategies where transactions become time sensitive. So we were actively looking for a better solution for ourselves at the time. And we really went super deep into vault infrastructure providers and realized that they have one common problem, which is that they scale through building custom adapters, which means that for every new protocol integration, they usually build a custom adapter. And this is a new layer of smart contract risk. It takes a lot of time, so it just simply does not work. And then we saw a recent trend in the market, which is basically taking a lot of shortcuts. So it's basically using MPC wallets and then basically having a lot of central points, calculating net asset value also off-chain. So the system is basically a tokenized wallet. It's not really a vault. It's not really DeFi. So what we wanted to do is position ourselves in between and take the best of both worlds, basically. So we started to work on this in November 2020. We started to explore the topic. We built the first MVP early last year, and now we're finally ready, basically. So we are finally launched. We have contracts audited, and we are ready to go. So we have been building this with a lot of security in mind. So we wanted to reinvent as little new things as possible, because we believe that a lot of great things have already been built in DeFi. It's just often a lot about putting things together in the right way. So we did a lot of research, and we took, for example, for custody, we're using Safe. For delegated execution, we're partnering with Gnosis Guild, for example. We're using their contracts for that. For governance, we're using Open Zeppelin. So we are really trying to minimize the amount of contracts we build ourselves, because we know that this represents risks. And then another part which we had to build ourselves because it was not on the market is basically how we calculate net asset value. So our really core of what we have delivered to the market is basically our net asset value calculator, which gives input for administration. So it settles deposits and redemption requests, and it allows people to basically invest in this vault and get out of the vault. So I think we have different segments of users. I think the segment that we were initially going after were DAO treasuries, because this is where we came from and this is where we experienced the problem. Unfortunately, there's a lot of bureaucracy a lot of times in DAO treasuries. So we've seen that they're not maybe like the fast movers when it comes to new technologies and so on. So we have maybe slightly pivoted into focusing a bit more on the new and emerging asset managers in the space, because those have, I would say, the most painful problem. They need to find a custodian. They need to find an administrator. The legal setups for setting something like that up are quite expensive. So with us, they have a lot of advantages because they don't necessarily need administrator. They don't necessarily need a custodian. They can operate in an environment in which they cannot do anything wrong. Basically, they cannot do anything malicious. They cannot send funds by mistake somewhere. So they're safe in that regard. Yeah. Right now we're still in closed beta, meaning that the platform is not yet fully open. we're working with 16 asset management teams. Half of them, I would say, are focusing on manually rebalancing strategies, and other half is building really interesting use cases on top of us that are really automated vaults. And the benefit that we bring here is that they don't really need to build their own smart contracts. They can just focus on the strategy. And so even if they automate the strategy, normally you would need to deploy it as a contract. But if the strategy is very complex, you kind of start hitting the limits of EVM. So it becomes, you cannot deploy very complicated strategies on chain. And our system allows them to, for example, off chain, run the thing and execute it on chain. And it would basically allow them to not do anything malicious again. Now partnering also with Oasis for verifiable compute, where we also minimize that risk. So you can even deploy, for example, the scripts that would previously run in AWS can become verifiable as well. So this is another benefit. In terms of AUM, I think most of our vaults are currently in ETH, so it's quite fluctuating, but we're close to 10 million in AUM in closed beta. We're looking to scale now, yes. Yeah, I think like it's a very good balance between me and my co-founder because he really cares about security and decentralization, whereas I want to also make it commercially viable and get it to market fast. So we have a lot of discussions around that. But yeah, we have decided from the start that we're not going to sacrifice decentralization because as soon as we bring one central point of failure into the system, it defeats the whole purpose. If there's one central point of failure, then we can just use normal MPC wallet and manage the whole thing like a traditional fund. There's no point in all this complexity. So yeah, we wanted to build it nuke proof. We wanted to make sure that if everything goes to hell, people can still basically redeem their assets, that they don't have dependencies on middlemen. And yeah, those were the core design principles behind building these vaults. Yeah, I think like there's two things that really excite me personally about the DeFi space. One is composability and the second one is efficiency. What I mean by maybe starting with efficiency is that, for example, decentralized exchanges need to employ way less people than, for example, centralized exchanges, because like most of the processes are completely automated. Everything is on chain. There's no really that much counterparty risk. You don't need to trust the middleman. So there's a lot of efficiency unlocks there. In our specific case, we don't need administrators. We don't need custodians. So there's a lot of people that just go out of the equation. And then with composability, I think we also unlock a lot of other interesting use cases because, for example, while capital can be reserved, for example, let's say in Carrot's case, one of our projects, the capital in the vault is mostly used for as a counterparty for traders and for their payouts and to hedge risk. But while the capital is idle, it can also be, for example, generating yield in Aave. So it unlocks a lot of things that the capital can do. Of course, every new source of yield is, of course, a new layer of risk. But just in terms of, I'm very optimistic. I believe that in the future, we're going to have even safer DeFi than we do right now. And that the composability is just going to unlock more capital efficiency and more utility of capital in the system. Yeah, I think the important thing to understand especially for builders and managers is how easy it is to spin up a vault on top of Rethink Finance. Because normally, let's say you would need to, in let's say two market segments. One is the managers who are manually rebalancing and managing their funds. They would need a custodian, administrator, complicated legal setups. So it's quite expensive and there is a big barrier to entry. All they need to do is think about the universe of assets they want to have exposure to. They connect their front end, generate basically almost automatically permissions for everything they need, generate valuation methods for all their positions, and finalize the vault. So it can be done in less than 30 minutes. When it comes to builders, they would again normally need to hire a whole team to build smart contracts with automations. It's much faster to write a short script where you define the actions that basically the vault should do than there is to write smart contracts, especially if we have guardrails in place that are protecting the vault, even if the script gets compromised. So it takes way less time to get to market fresh new ideas. And yeah, we are very open to fresh new ideas. if in case people are interested in building interesting vault strategies, we're definitely keen to talk to them.